If you can't even understand the turnover rate, I suggest you don't trade stocks. Turnover rate is as important as trading volume. It reflects the frequency of chip exchange, reflecting the activity of stock trading. In other words, the turnover is a thermometer to measure the popularity of a stock. A normal body temperature means health. High or low body temperature hides risks. Mastering the following 5 uses of turnover rate, you can detect the main capital's trend and easily judge the strength. Say goodbye to blind following. The first type, 换手率 between 3 and 5%. It usually means that the main force is buying, especially for low-price stocks, deserves your attention. The trading activity is moderate at this time, not too quiet to be ignored, nor too flamboyant to cause following. The main force may be quietly, to prepare for the subsequent rise. The second type is a turnover rate over 8%, but less than 15%. It means the main force is entering the market, and the stock price is expected to rise. This level of turnover shows an increase in market attention and significant capital. It's a positive signal for stock price, but it is worth noting that it is not advisable to chase high positions. It's suitable to hold or follow. The third is that the turnover rate exceeds 25. Often means the main force starts to ship. If the stock price is at a high level and a big negative line, it is a top signal. At this time, the main force may have cashed in profits at high levels. Retail investors are still rushing in. The result can only be buying. So be cautious at this time. Better to miss it than to make mistakes. The fourth is that the turnover rate exceeds 50. It means the main force is fleeing and the probability of a crash is high. In this case, sell decisively. Don't be lucky. High turnover is usually accompanied by panic selling and the stock price may collapse. It's like a blizzard in winter. It comes suddenly and violently. If you don't escape quickly, you'll be frozen. Remember, saving your life is more important. Fifthly, when a new stock is first listed, the turnover rate reaches 50%, and it remains around 20% afterwards. It usually indicates that there is room for rise. This indicates active trading and high market attention. The main force may continue to absorb to accumulate strength. New stocks are like newly listed stars. The more popular, the further it goes. But also note that if the turnover rate shrinks rapidly, it means the heat is fading. You should leave, but as long as you remember these 5 situations, you can avoid at least 90% of traps and seize 80% of the opportunities. Okay, that's all for this video. See you next time. See you in the next video.